How's it going?
Good. Yourself?
Awesome, yeah. Doing good, yeah.
Good.
What time is it over in Oz? Early?
10:59. So not
Oh,
too bad
gee.
in the evening. And where are you? UK?
In the UK, yeah.
Yeah,
North,
perfect.
near Manchester.
And what's the time there now? Is it
Just
morning?
2 o'clock, yeah.
Oh,
2 in the
it's
afternoon, yeah.
2 o'clock. Oh, good.
Anyone else from the team, just raise your hand. I think we're waiting for Adamo, Amar, Cryptofish, and KK. Oh, KK's here. Hi, KK. How's it going?
Good. How is everybody? Thanks for having us.
Good. Thanks for coming again. It was great last time, and yeah, I was so impressed with the white paper. I was just saying in private, it's the best white paper I've read this year. So it's in layman's terms and very accessible for all investors, which is what we want to do. As we go mainstream. Very nice.
Thank you.
So Adam, I see you joined. Just raise your hand so you can be unmuted. There we go. Hey, KK.
Got Adamo. Yeah.
Hey, Red.
Long time no speak. Like 5 minutes?
Yeah, absolutely, mate. That's the
We
longest
should
I've been apart from you.
Yeah, we should catch up.
I'm getting withdrawal symptoms.
Okay,
And Glenn, that was good to hear in our chat about the white paper when you said you were pumped about it, because I've never heard anyone say they were pumped about reading a white paper. So that was that was cool to hear.
I'm maybe a bit strange. Yeah, I've done 305 AMAs this year, and I just like well written, and I can put my notes down, and and it's just when it's really smooth. It's hats off. I'll always pick up the people that make really great white papers. Definitely.
Yeah, absolutely. Hey, Omar, you just joined. Just raise your hand so you can be unmuted. Same with you, Red One. Just raise your hand.
Omar?
Yeah, there we go.
Hi, Omar. And Cryptofish. Let's get Cryptofish, and that's everyone, I think. All right, so I think everyone's unmuted. If you guys are ready, I can start the record and introduce you, and we can go into the AppPay project.
I think we're good.
Okay. Welcome to our community. I'm Glenn, your host today. Today we have joining us AppPay. AppPay, you might know, was with us last week with another project that they're doing, which is LoveChain. We can sort of interlink how they all work together. But AppPay is a DeFi protocol. It is the first buy now, pay later platform built integrating blockchain technology with its own cryptocurrency. So we'll go into the project shortly. But first, can you introduce yourselves with your background and experience, guys?
Hi, Ken Kaiser. I'm CEO of the group. I've been 20 years in FMCG, from manufacturing to M&A, operations, sales, marketing. Sat on a number of boards, bought and sold a number of businesses in my experience, and have been an investor initially in this project, and took on the CEO role earlier this year, and obviously came in as an investor, saw the massive opportunity that AppPay brings. That's what got me, interested in the first place to put, a big investment in, and then obviously come on board to help launch this project and get this app off the ground. Nice to be here.
I don't know if anyone else wants
Adam?
to go next?
Hi.
If you can go next.
Hi, Mike.
Yeah. Hi,
My name's
Adam Safero.
Omar.
I'm the co-founder of AppPay. I have a background in corporate law, mergers, acquisitions, and have also been very involved in various businesses, mainly as CEO role in the medical space. Further to that, I'm also involved in straight up mergers and acquisitions, in assisting clients putting transactions together, dealing with private equity firms, family offices, and so forth. I've been in the crypto space for around 4+ years. I was introduced to it or brought into it by Omar. Omar and I have known each other for over 20 years, both professionally and on a personal level. And we've done some business in the past together. So yeah, we've been working on AppPay. We're very excited about it. We can see the great potential that it has, and the real life use case that it brings to both the mainstream and also the cryptoverse space.
Hi, everyone. My name's Omar. I'm co-founder of AppPay with Adam. Very happy to have you to be on your chat tonight. As Adam said, he and I have known each other for quite some time. My background's in financial markets, in trading, derivatives specifically. I've been in the crypto space probably since about 2014, back when I was originally just starting off trading the assets. That basically led us to exploring, the technology in depth, and that's where we sort of, our projects were born out of that. AppPay in particular, which is, as Adam said, a very interesting one. Yeah, and that's me in a nutshell.
Hi everyone, my name is Radwan. I got involved with the team, AppPay team, from the beginning. When Omar told me about the blockchain project, AppPay, the buy now pay later on blockchain, and what it will bring to the world, and how it can change the buy now pay later space, and change the way people shop forever. So it was very interesting, and I've been along for the ride since day one, and here we are.
I don't know if that's everyone or Jem wanted to say anything. No, okay. Well, let's move on and go straight into the project. So if you can give us an introduction to the AppPay project for our community investors.
Kick that off. So AppPay is essentially a decentralized payment gateway and microfinancing platform. So it basically encompasses two main features. One is the pay with crypto feature, and that is essentially where people can use the crypto that they hold in their AppPay integrated wallet to spend in our marketplace. So essentially, it's one of the advantages of that is that we pay the merchant in the merchant's currency of choice. So whether that's, say, a stable coin in their local denomination or in fiat currency, we have that capability. And that definitely means that we're able to bridge the divide between the cryptocurrency world and the mainstream. Similarly, the other key feature is the buy now pay later feature, which is, as far as we're concerned, very much an exciting, platform in itself, and that is where everything is decentralized. So we run a model where the funding mechanism is decentralized. So that is achieved by allowing people to stake one of the supported stable coins. That allows us to basically open up the funding mechanism to anybody. So you could, stake as little as 50 USDC, for example, and play a role in funding the buy now pay later feature. From that stakers do derive a revenue bonus, and they also get a farming bonus as an added bonus on top of that. Our merchants similarly basically are able to connect through some innovative APIs that we've developed. And what that means is merchants are also able to participate in the rewards. We pay them a percentage of the transaction value in AppPay tokens for their participation. We also provide them with a unique merchant dashboard, which we can talk about a little bit later on. And then there's obviously the shoppers. Now, the shoppers who do access the buy now, pay later feature, essentially once they've completed their repayments, they are rewarded with AppPay tokens, which is once again a percentage of the transaction value as well. Basically, the aim is to create a network of users, all different types of users, and basically the value that is derived from that participation is distributed amongst the users as well.
Great, Omar. Yeah. So for anyone shopping on the platform, I was reading on the white paper, repay in four, it's called, 4 equal installments over 3 months. And there's 0% interest and 0% late fees involved.
Correct. You know, one of the key reasons for that is we did listen to what the user experiences were in terms of other buy now, pay later platforms and credit cards as well. So we were mindful of the shift away from credit cards by younger demographics, in particular Gen Zs and millennials, and they were, you know, in particular the ones that are driving the growth of buy now, pay later platforms globally. Here in Australia, we've had quite a significant, boom in the space over the last 7 odd years. A lot of you might be familiar with AppPay, which a firm went on to buy for $29 billion a couple of years ago. AppPay was a startup that kicked off here in 2015, and really, I guess they caught the wave of that generational shift in buying habits, and they were able to benefit from that. So we did a deep dive into what these platforms were doing and what their user bases didn't really like about them. And so what we did was we made sure that when we built AppPay, that we were integrating the sort of features and components and the sort of rules around that were going to be attractive for users to buy. So no interest was a critical one. No late fees was another one. We want the user experience, and that's what's going to drive the adoption of this to be as, I guess, as easy as possible and as painless as possible, whilst being mindful of the need to ensure that we're capturing revenues and our costs were all going to be adequately covered. And that's where blockchain technology comes in, because that really allows us to do that in a more efficient manner than the existing platforms are able to do so.
It's a great idea, 0% interest. I know Apple offers you can buy an iPhone on their website, and through Barclays Bank in the UK, you know, they offer the loan and there's a 0% interest. So it's really popular, and it gets people who wouldn't necessarily be able to afford it and pay it over a 2-year period, you know. So so if you're purchasing something small on the platform or large, so what sort of payment periods are there, short and long term?
The payment periods are in over 4 installments. The first installment you pay at the time of purchase, and that's 25% of the transaction value. And then the 3 remaining repayments or installments are made over a period of time, and that can range from 1 month to up to 3 months. Just depends on where you're located around the world, but also you have the option to elect your repayment period as well.
So that sort of links in with my next question. Yeah, the merchant makes the sale and is paid in full. And I was going to ask who is providing the loans and covering the capital costs, but with a down payment of 25% on the purchase, that covers it. And I think we went into staking as well, which will cover some of the capital costs.
Yeah, I can talk a little bit more about the actual funding mechanism. So you're spot on. The actual stablecoin staking is basically what, you know, as I mentioned earlier, is the decentralized funding mechanism. So essentially, if you think about the internal workings of AppPay, it's essentially a series of both digital and fiat currency pools. Some of the credit that is extended to buyers is originally derived from the stable coins that are staked. So essentially, if the protocol needs to, it'll swap out of the stable coins into fiat currencies using the exchange partners that we have within the Fireblocks framework that really secures all these wallets, including our user wallets within the app. Beyond that, within the protocol itself, there is what we call the organic lending pool. Now, the organic lending pool is essentially when we do kick off the public launch, we'll be funded directly through some of our investors and through other channels. And what that pool is all about is essentially AppPay lending its own funds. Now, there is an added sort of, I guess, transactional fee that goes into the organic lending pool. So basically a fixed portion of the margin that AppPay makes on every single transaction feeds into the organic lending pool so that it's growing over time. Now, with time, the modeling suggests that the organic lending pool will get larger and larger and play a larger role in funding, possibly to the point where we no longer need the stablecoin staking mechanisms to facilitate the funding for the buy now, pay later feature. One of the added benefits of having that organic lending pool is from a, I guess, an incremental value add perspective. Because we're not paying revenue bonuses or farming bonuses that are paid to the stablecoin stakers, then essentially the margin that is made with the protocol lending its own money is much, much larger. And so basically that value is what is captured by the token holders over time. So obviously over time, that amount is going to get larger and larger, and the benefit to AppPay token holders is going to accrue in tandem with that.
Okay, great, Omar. And that's the AppPay integrated wallet. It's offering AppPay token staking and stablecoin staking. I'm wondering which stable coins you'll be able to stake, what the APR, the APY would be. I know Binance does like between 5 and 25%, and it's very popular with investors.
Yeah, I mean, good question as far as the APYs are concerned. I mean, the way our smart contract is built, stablecoin stakers earn a bonus that is derived directly from the growth in the revenues of the protocol. So essentially what happens is, and one of the reasons why it's designed like that, it's to give them essentially direct benefit from real world transactional revenues. So we're not pulling rabbits out of a hat. We're saying that this is how this model works. If you stake your stable bonus that you earn at the completion of yours is paid to you from the revenues that have been accumulated over the term of your stake. So a portion of those revenues that have been accumulated over that term. And that basically is for the benefit of both the stablecoin stakers and also more broadly for everyone within the protocol, so all the other token holders. I guess one way to look at this is that if we consider that most enterprise experience the highest growth rates in their revenues in the early stages of their life cycle, then the opportunity to get some really decent revenue bonuses are probably going to apply. Obviously, as a enterprise matures, then the revenue growth slows down, and that's when you get probably a more stable return associated with those revenues. But in the early stages, it's potentially something that's more lucrative. But once again, it's not something that is based on some arbitrary figures that we are, just putting out there. I mean, it is derived directly from a percentage growth of the revenue pool.
Okay, great, Omar. And have you been approaching business partners and interest that you've had from businesses? They're looking to sign up on the platform. What's been the response when you've been going out there talking about the AppPay platform?
We've been already signed up over 500 merchants before we have gone live, which has been, we've had some great interest. You can check out some of those merchants on our platform, on our website. We've got some major brands out there, like major fashion brands, electronic brands, cosmetic brands, gaming brands that have already signed up. So we've had a lot of interest. But a big part of our growth strategy is integrating into payment merchant gateways. So, we've created our own e-commerce plugins to be able to do that efficiently. So we don't need a team of salespeople on the phones or knocking on doors to build our merchants. We've created this technology to make sure we can integrate, and we've got a number of payment merchant gateways that are already waiting for us to build the plugins to be able to grow. And these payment merchant gateways that we're talking to, some of them have a few 100,000 merchants that they have in their ecosystem that we can integrate straight into. So to scale, we'll be able to scale very quickly. But our core focus is on the gaming industry, on the esports industry, and on the NFT marketplaces. That's where we see a major opportunity in the buy now, pay later, major growth. A lot of those, to start off with for us, are those that understand, what we're doing. But the bigger picture for us is to get the mainstream over and have the mainstream using our platform, because there's no reason they shouldn't be using it. The growth of buy now, pay later in the mainstream at the moment is significant. And it's still a very small part, but it's still a big number, right? E-commerce is a $5.5 trillion industry, and buy now, pay later is already over 2% of that, set to grow to 4.2% in the next 3 years. That's a $233 billion industry. And with the efficiencies we're putting in place by using blockchain to make it more efficient, right? We're building a mainstream business that is using blockchain technology to make it more efficient, smart contracts make it more efficient, and then putting a number of businesses into one with the marketplace, with pay with crypto, buy now, pay later, lending protocol, which is the staking feature, and then a rewards program to support it. We're putting all that into one, but we're using the blockchain technology and the smart contracts to make it more efficient. That's what we're all about. But a long-winded answer to answer that, yes, we've got over already 500 merchants that are already signed up.
Awesome, KK. And
hey, Glenn,
doing,
sorry to
Glo?
interrupt, brother, but Josh just raised his hand. He's also from the team. He's the CMO. So if you could just unmute him as well, so he'd be able to speak. Again, apologize for the interruption.
That's fine. Yeah, I've just unmuted him. That's great. Yes, are you going to go global with this? Or are you starting in Australia? Have you looked at the rules and regulations of each country to expand it over to Europe, North America, Asia? How are the rules and regulations working for each country? Is there any sort of problems there, or is it easy to do? Amazon's in nearly every single country in the world, and it works fine.
Good question. With buy now, pay later, at the moment, it's largely unregulated around the world. And when I say around the world, I mean the countries and the geographical reach that we want to target, and that being here in Australia and New Zealand, North America, and then parts of Europe. They're our key target markets initially. In saying that, we know that the buy now, pay later is growing, and it's not slowing down in terms of its growth. And we know that governments are looking at the space. So what we have done is that we've built AppPay to be as if regulation was already in place for buy now, pay later. And what that means is new customers will undertake KYC, we'll be doing credit checks, we'll be adhering to responsible lending practices and things like that, and also then obviously around things around privacy and so forth. Because we know that, like I said, that regulation is coming in the buy now, pay later space, and it will be very similar to the way regulation or the laws regulate the consumer finance space at the moment.
Okay, great, Adama. And I was wondering, how do you recoup losses if payments are not made? I know you've got a tier system as well, if we can go through that. So that's mitigating sort of risk because you start at tier one, I think it's $200. So you're not just going to offer someone $5,000 off the bat. But yeah, what's available if you have losses because payments aren't made by customers?
So firstly, the initial amount of credit that is advanced to a shopper is $250. And by us undertaking the KYC, the credit checks, putting in place responsible lending practices, we see that as a form of mitigating any risk to having delinquent loans. But in saying that, the actual rate of delinquency in the buy now pay later space is actually relatively low. But we feel that by us putting those measures in place, as if we were regulated, we'll hopefully mitigate that even further.
Great. And how do you sign up as a customer onto the platform, and how long does that sort of take, and what's the sort of delivery times going to be for products that are available on the platform?
Signing up is fairly easy. It's basically the onboarding process is just a question of, initially your email address and a password, much the same as, signing up to any platform. There will be KYC checks for everybody that signs up, and that's because of the integrated wallet functionality. So in order to satisfy, most jurisdictional requirements, KYC checks are a normal part of, the sign-up process. Basically, then the user has the option of whether they just want to use their crypto wallet to shop, or whether they want to apply for the buy now pay later function. So if they do want to apply for the buy now pay later function, then essentially we run them through a fairly quick and automated credit check process. And basically, if they meet the benchmarks for that, then they're given approval for that initial $250 credit limit, which they can use to shop using that buy now pay later feature. I guess in terms of there isn't really anything else in terms of the onboarding side of things. I mean, we're trying to keep it as automated and as simple as possible. And once again, that's driven by ensuring that the user experience is a fairly seamless one, and that it also can appeal to not just those that are crypto literate, but also to those that are not necessarily a part of the crypto universe. So we do want to give it some universal appeal. We think that's important. Beyond that, I think Ken may have wanted to add something, so I might leave it at that for me.
Did you have something to add, Ken?
Yeah, sorry, couldn't unmute. No, I think Omar answered that pretty seamlessly. Yes, we're trying to keep it as simple as possible in the sign up process. We want to make sure it's fluid, and we built those smart contracts to make sure it's as efficient as possible back of house as well. That's really what this protocol is all about.
I just wanted to emphasise one point, sorry. In relation to the sign-up process, you only need to undertake the credit checks if you're actually opting for the buy now pay later feature of the platform. If you're not, then you don't need to undergo credit checks and just simply have to go through the sign-up process, which is very simple, and undertake the minimal KYC.
Okay, great. And as a merchant, what would be the sort of profit share on the platform, and what happens with the profits? Do you charge a small amount? And what's the sort of prices compared to, say, Amazon or eBay? Are you competitive?
I might jump in here on this one. So in terms of the merchant experience, it is pretty much similar to other buy now pay later platforms. So there is a merchant fee or a commission that we generate, and typically it'll range between 4 and 8%. on the transaction. In terms of what the merchant gets out of that, well, we pay them essentially a bonus for every transaction that is executed through AppPay on their platform. Now, that is made as a percentage of the transaction value, which is what I mentioned earlier. And it depends on whether they choose to accept fiat currency or stable coins for payment. They'll get more. So if they accept fiat currency, it's 0.5% of the transaction value that is given to them in AppPay tokens. If they accept stablecoin payments, then they get 1% of the transaction value in AppPay tokens. And one of the reasons for that is we do want to incentivize merchants to, over time, migrate to that digital currency payment model. We already know from some of the surveys we've been across on some of the major payment gateways such as Circle and Visa that quite a high percentage of their merchants are looking at digital currency payments into the future as a way of being more efficient, and they are more cost effective. So to, I guess, put it in numbers, most merchants pay their payment terminal providers around 1.5% of the transaction value in fees. When it comes to stablecoin payments, they can eliminate basically 98% of those costs pretty much, depending on, which chain you're using, and we're using Solana initially. So they will be able to really capture some not just some time efficiencies, but also some actual financial efficiencies by accepting stablecoin payments. Beyond that, the merchant experience is one where our unique merchant dashboard has an integrated digital wallet. So it's a little bit different to their normal merchant dashboard that they may have with other platform providers. And the real unique thing about that is that not only can they capture their stablecoin payments and their AppPay token rewards, but it also opens up the potential for them to use that as a two-way flow of assets between them and their customer base. So essentially what AppPay is doing is it's bringing the Web3 experience to merchants. And we've all seen merchants coming into the cryptocurrency space, in particular when it comes to NFTs over the last few years. I think what we're doing essentially gives them that versatility, and they can tailor, rewards or promotions with their own, say, NFT offers or their own token rewards through that portal, through that merchant dashboard, to drive higher levels of activity when they have certain sales or promotions, and certainly to look at enhancing their customer loyalty. If we look at this as a generational thing, then we know it's all about, the Gen Zs and the millennials. And really, it's about not just about capturing a customer, but also keeping them there as well. Given that most of the adoption in cryptocurrency and also buy now, pay later has been driven by these generations, then I think it's really something that talks to the future of the retail experience for a merchant.
Okay, great. And going back to the customer, they can repay with direct debit. I was looking at direct debit cards and then approved cryptocurrencies and stable coins. I'm wondering which cryptocurrencies and stable coins you're looking to use on the platform.
I think I'll take this one again. Sorry about that. So when it comes to paying a merchant, as I said earlier, the merchant chooses the currency that they want to be paid in. And that will be limited to either a stable coin in their local denomination or fiat currency. And that's to eliminate some of the volatility risk that's associated with, passing a altcoin over to a merchant, right? As far as the shoppers are concerned, we will basically allow them to pay with the supported currencies. Typically, I guess in the early stages, it'll be something that's limited to, say, the top 20 currencies, for liquidity reasons, and also to eliminate some of that ability to, from a liquidity perspective, to swap it out for a stable coin as far as the protocol is concerned. But a shopper can make payments in a suite of those currencies. When it comes to making repayments to the protocol for the buy now, pay later feature, then they can make that repayment in one of the supported stable coins that, that we will support initially. And they will include USDT, USDC, DAI, and BUSD. And there's an Aussie dollar stablecoin for us here in Oz that we're looking to support, which is AUDT. Beyond that, I guess as I said, the protocol itself is a series of different currency pools, digital and stable coins. AppPay, the token itself, will be given currency value in the marketplace. So those that earn it as rewards, or those that hold it and have earned it through some other mechanism, whether it's through the farming bonus or they've bought it on an exchange, etc., it will be given currency value in the marketplace where they will be able to use it to make acquisitions of goods and services. In terms of, I guess, some of our, partners in the digital realm, so NFT marketplaces, esports or gaming platforms that have a digital marketplace that has been integrated with us, then we will probably accept their native tokens as currency as well. But we will probably come to fixed agreements on a individual basis with those platforms as we move on. But there's certainly synergies that we can capture in that space as well.
Okay, great. And for the customers, what sort of security is built in if they don't receive their product, whether it's sort of a physical product or NFT that disputes with the merchants? How will it work around that?
So the way that works is the transaction is still between the customer and the merchant. We are purely funding the transaction. The merchant would send the goods or services to the customer, and any issues that the customer has with those goods or services that they've received or purchased, that is between them and the merchant.
I see. Fair enough. And so how does the AppPay token tie in with the platform? What can you do if you hold a certain amount? Would you maybe be able to get discounts on the platform in the future, or what sort of advantages for the investors holding the AppPay token as well as staking?
So merchants do get to stake any of the rewards. Anybody who holds the token is able to actually stake it and earn, the quarterly, revenue bonus that they can derive from having done so. I guess as far as just participants generally and what they can do with the tokens, we've gamified the platform. So one of the options is, in order to migrate to a higher credit limit, you can either stake or swap your token. And so staking it for a period of 28 days, say, will give you access to that sequentially next higher credit limit, provided you've met the benchmarks of a certain number of repayment cycles and a certain number of AppPay tokens in order to do so. At the end of the staking period, you will get the access to the higher credit limit, and you'll also get to keep your rewards tokens. If you decide that you want to swap them instead for the higher credit limit, well, then you'll forego those tokens. You'll get that higher credit limit immediately. And those tokens that we capture through that process are then just recycled into the rewards pool.
Great. And LovePay and AppPay, how do you divide the teams over the two projects? Because you've got two project or companies, I would say, because it's a very large platforms.
We've got either full-time employees on either project. We've got some senior teams like the CMO, the CEO, the head of devs, the CTO, that looks over both projects. But apart from that, we have specific teams like UI team, individual back-end developers for each project, partnership managers for each project, social media team members for each project. So they're divided and separated, apart from, sitting from the founders and a few of the senior team members. That's the only place it crosses over. And that's just obviously making sure we're looking at our financials, making sure we are hitting our strategy and targets and plans, and obviously making sure we're not overspending any money. Being a startup, we want to make sure we stretch every dollar as much as we possibly can.
Okay, great. And listed on MEXC recently, MEXC Global is one of our partners. That's great. And what other partnerships are you building in the crypto space around the AppPay project?
We've got a number of partners we've already partnered with, apart from obviously a number of exchanges. We've got another exchange like Binance Pay. We partner with a number of gaming platforms. Gems being one of them. We've got our partners that are going to be onboarded and still onboarding, like our wallet partner, Fireblocks. Numerous other partnerships in the gaming space, NFT space, esports that are coming on board as we go live. I mentioned some of the big brands, fashion brands like Adidas, Dior, Mecca in makeup, and hotel brands, and Swarovski in jewelry, so forth, that have come on board as partners or merchants as we go live. We've already been lucky enough to have a lot of interest in the project, which really legitimizes and shows a demand for the product that we are building. And that's been twofold. We've had a number of electronic companies that are very well known, especially in Australia, that want to partner with us. That's a reason that they want to give their customers the ability to pay or be paid in crypto, and they also want to be at the forefront of technology to advertise themselves and promote themselves, to say we accept stable coin payments, crypto payments, and we're also also allowing you to pay with it, and we're also taking it in as a form of payment. They want to promote themselves as well, not only that they see the opportunity, but we're early along the journey with those type customers, and that's why we're really focused and partnering with, as we keep mentioning, the gaming community, which is a multi-billion-dollar community, one of the fastest growing business sectors in the world, due to be one of the biggest employers in the world by 2030. So that's a major focus for us. Apart from the NFT marketplace, which is another major growth area, and esports, which is another key area for us, and that's the realm of the current users in not only the crypto space but also in the buy now pay later space, those millennials and the Gen Zs.
So then, going back to the token, it's a governance framework. So AppPay holders have a voice in how do AppPay evolves in the future. Is it like voting rights if you hold so many tokens? How does it work for investors?
Yeah, exactly. Pretty much, if you hold the AppPay token, then you get a seat at the table when it comes to governance. And essentially what that means is that you can make proposals and vote or delegate your vote to those proposals that you, want to support. I think essentially with a project like this, it's quite likely that what we're going to see is probably some major institutional type investors, or those that have a strategic interest in the space, that might seek to accumulate and therefore have some sort of prominent voice in what goes on. Obviously that'll happen over time, but it tends to be the case with most DeFi platforms, is as soon as those they list and their tokens are available and the protocols are operational, then you tend to get the larger institutional type players accumulating positions to give them that sort of voice at the table. As far as we're concerned, I guess the key for us is to give anybody who holds the token a voice in what goes on, and to be able to vote or propose or delegate votes in order to shape certain decisions that will help the platform evolve over time.
Okay, great. We'll open it up to community investors shortly, but what's the marketing plans for the AppPay platform and the AppPay token going over, let's say, the next quarter?
Hey guys, Josh here, CMO. I can jump in for this one. We're really focused with the product launch, right? Really, we're building an app for consumers and retailers, and that all starts end of this month. So we're actually rolling out our first launch for AppPay Business, and that's where tradespersons, like small business, sole proprietors can all jump on board and start kind of accepting payments from customers in cash and taking that out in crypto. So that's like our first kind of real world launch, real world utility, and that starts this month. Then over the next 3 to 6 months, we'll kind of be rolling out more features with the launch of the app as well. We're going to enable real world shopping with crypto, buy now, pay later, and a host of features coming shortly after that as well. But really, our strategy for acquiring customers is threefold. The first is to generate buzz and talkability. So we do that through PR, and PR comes in a few different ways, shapes, and forms. There's PRing the business to the industry. There's PRing the app, obviously, to the crypto community and those that want to shop with crypto. And then there's the big push around mass awareness and mainstream shoppers and retailers as well. So the PR is kind of the first pillar in that. The second one is really like tapping into influencers and building what we call social proof. So this is where we normalize, like we're doing something new, shopping with this product, and it's not something that's familiar to people right now. So what we want to do is make that normal and show a lot of people doing that. So we'll have a combination of pretty big influencers that will really drive that talkability and high levels of awareness. And we'll combine that with a micro-influencer strategy as well, where we're just showing people, shopping with our app, retailers using the platform day in, day out. So that's the second part of our strategy. And the third part is a performance marketing layer where we really drive downloads, right? So what we have for that is a multi-channel attribution strategy. So we do know from a lot of research in this space and from apps that I've launched and helped build a customer base on before, that often, people need to see us 5 to 7 times before they're ready to sign up an account and start using the utility that we're giving to them. So for that reason, we'll be across Facebook and Instagram, driving downloads. We'll be advertising in the App Store. We'll be tapping into the Google Display Network. We're running search engine marketing. And really, it's about finding the right channel mix with the right message for the right audience, and then trying to drive the lowest cost per acquisition for those customers. And really, the goal is to get your first 1,000 customers, learn from that, bring your cost of acquisition down, and then pour more money in and start to scale that to get some volume and some real growth. So that's our strategy. That those three kind of key pieces: that PR and word of mouth, driving that social proof, which will normalize using this type of product and educate people. And then the third one is driving downloads for the right cost and price. And I might throw to the guys around the listing strategy and what's coming up down the roadmap for that.
Okay, awesome, thanks, Josh. Let's move to using questions. Syed, you had a question for the AppPay team here. Go ahead.
Yeah, thank you, Glenn. Okay, so I want to know that do users have to transfer crypto funds to the integrated cryptocurrency AppPay wallet, or user can directly connect their personal wallet like MetaMask or Trust Wallet for making payments? How will that work?
That's a good question. Thanks for that. Basically, if you want to just stake a stable coin and capture the revenue bonuses and the farming bonuses, then there's 2 ways to do it. One is you could either download the app, or you'll be able to connect through an interface much the same way you would with a NFT marketplace or a DEX, a decentralized exchange. In terms of actually the buy now, pay later feature with crypto feature, then you will need to download the actual app for the buy now, pay later feature in order to cover us with regards to the payment options or repayment options, I should say. You would need to download the app, attach a debit card to your wallet that we would be able to debit when the scheduled repayments fall due, and that also allows you to obviously capture all the rewards that you might accrue through your participation on the platform. So it is, trying to be as versatile as possible. We do know that some people that, there are some people out there that just might want to capture the bonuses, and in by extending, credit through the stablecoin staking mechanism. We also, from the perspective of trying to, ensure that we have the necessary processes in place to mitigate any credit risk or repayment risks, for the protection of the protocol and all our token holders. The necessary attachment of a debit card, basically, and also to sign an authority that allows us to debit the integrated digital wallet would be a necessary part of the buy now, pay later feature access.
Okay, understood. Thank you for clearing that up. Thank you so much. Over to you, Glenn.
Good question, Syed. Let's move to Aisha. You had a question for the AppPay team. Go ahead.
Yeah, thanks, Glenn. So you mentioned about credit checks. I was thinking, will you be using soft credit checks when approving consumers for BNPL loans? And will you be reporting loans taken by the consumers to the credit reporting bodies like Experian or Equifax?
It's a good question. So we will be using Experian to undertake our credit checks, and they will be what we would see or consider soft credit checks in what we will be doing. In terms, I think I heard you asked if we will do the reporting. Was that correct?
Yeah.
Yeah. So if a customer defaults, and are deemed a delinquent and haven't brought their account back into order within the required time frame after they've after we've taken steps to assist them, then we would be reporting them to the credit agency, and that all goes back to the policy of having responsible lending practices in place, and that also goes for ensuring that we take on customers that we believe will be able to repay their credit, but also being able to manage that credit risk moving forward, and we'll also be having in place credit monitoring as well, which means we can monitor customers' behaviour in terms of their credit practices once they are a customer of ours, if we feel there could be an issue with their repayments in the future.
Okay, understood. Thank you. Thank you for answering.
No problem. Thank you.
Let's move on to Western Beast. You had a question for the AppPay team. Go ahead.
Yeah, thanks, Glenn. Okay, so I have a few questions from your website. I actually saw that repayments can actually be made from credit and debit card connected to the user's accounts, and users can also repay with approved cryptocurrencies and stable coins, which are fiat. So you didn't really make mention of what approved payments will be made with, or is it the same as the stable coins that will be used for staking?
I didn't quite get that question. You might want to. I think I missed parts of it.
Yeah, the last bit dropped out.
Okay. So I saw on your website that repayments can be made with direct debits and debit cards connected to the user's accounts. and this makes users to be able to repay with approved cryptocurrencies and stable coins. So what approved stable coins will the repayment be made with? Or is it the same stable coins that will be used for staking?
Pretty much you're spot on there. It is the same coins that are approved for staking, and one of the reasons for that is essentially, as I mentioned earlier, the protocol itself is a series of digital and fiat currency pools. So whenever we get the opportunity to replenish those pools by ensuring that the various flows into the protocol are matched, then it basically reduces the number of swaps that we will need to undertake within the protocol itself.
I get it. So my last question is, do you have any plans in the future to allow micro loans or partner with other loaning organizations from Wales who, purchase a significant amount of your tokens?
Well, I mean, we are kicking off, I guess, in the realm of what is considered microfinancing with that $250 limit. If you're talking about smaller amounts, it is conceivable. I think that's more of a geo sort of location strategy, and different sort of locations may have different types of regulatory frameworks and associated risks that might come with that. Having said that, we are open strategically to considering any number of options out there, and we have certainly been approached by institutions in different parts of the world where they are experiencing an appetite for buy now pay later generally as a form of retail micro financing. So I guess essentially what we do want is we want to get what we're doing right in the locations that we have a fair amount of data and experience with, and then we will look to expand beyond that. I think it makes sense because if you really are a believer in the decentralized ethos, then that makes total sense. It's sort of like a way of bringing the benefits of decentralization to areas that don't have the sort of financial infrastructure that is available to those economies that are more developed. So it is something that we will consider when the time is right.
Thanks, guys. Thanks for answering my questions. Wishing you guys the very best. Over to you, Glenn.
You're welcome.
Thank you.
It's Western Beast. Let's move to Dennis. You had a question for the AppPay team. Go ahead.
Yeah, thank you so much, Glenn. As you guys have buy now pay later for the customers to buy the products in installments, and you guys have described it really well during the AMA. But it caught me curious that do you also have this feature for the merchants that want to set up a marketplace at Pay and want to have some premium features of AppPay, and for listing on the marketplace they want to pay the necessary fee in installments? So do you have that kind of mechanism for the for the merchants as well?
Well, I think as far as the merchants are concerned, we are largely automating the process by which they can connect to the AppPay protocol. So essentially, we have built plugins using payment platforms such as Shopify, Magento, BigCommerce, and WooCommerce. And what we do is the merchant experience is one where essentially they'll go onto our website and complete the merchant application form, giving us some key data about them. We will run obviously some broad checks on that merchant just to ensure that they meet the sort of requirements. But largely the mechanisms by which they onboard themselves are in their hands. We'll provide them with the plugins, and then the process, as I said, is largely automated. When it comes to providing financing to the merchants, well, essentially we are indirectly, because we're providing finances to their customers. It doesn't cost a merchant a great deal to actually integrate with the platform. And I think the net benefits to them over time essentially those that are well documented within the whole buy now, pay later space. So they get the benefit of higher transaction values, they get the benefit of lower cart abandonment rates, and with our unique proposition through our unique merchant dashboard, we're giving them the ability to really enhance the way that they can engage with their customers, in particular around prominent sales or promotional events, where they can potentially capture a large amount of traffic to their stores. So I hope that answers your question.
Yeah, thank you so much, Omar, for answering my question. And you guys are really doing great. I have read the white paper and everything seems really clear and legit. Thank you. Thank you so much for answering my question as well.
You're welcome.
The question, Dennis. Let's move to Josh Winks. You had a question for the AppPay team. Go ahead.
Okay.
Yeah, just
So can you hear me?
we can, yeah.
So my question is, I read from your website that for every successful transaction, your users are being rewarded. So my question is, I would like to know to what percentage is this reward?
So for the shopper that, sorry, was somebody else taking that or should I take it? I'll take it. So for the shopper, the reward that they get is when they complete their repayment. So once they've completed their scheduled repayments on time, essentially the smart contract executes a payment of AppPay tokens to the value, to a percentage value of their transaction amount. So if they've spent $200, for example, then the reward that they earn will be, say, 2% of that transaction value paid to them in AppPay tokens. It goes directly into the integrated digital wallet.
Okay, great. I just muted Joshman because your mic was feeding back, but I think that answers your question. Let's move to I'm Silver Surfer. You had a question for the AppPay team. Go ahead. Are you there? I'm Silver Surfer?
Yeah.
No? Oh. Hi. Go ahead.
Yeah, so my question is basically in terms of targeting the non-crypto users towards your wallet, like for example, those who people are new. So what advantages do you provide so they can either shift to your wallet and use it more frequently?
Sorry, I didn't quite get that. Can you repeat that for me? Unless somebody else wants to take the question if they heard it.
No, I didn't get it either.
Yeah, it wasn't worded very well. Something about getting people to adopt the AppPay wallet.
Actually, I'd like the team to expand on that actually, because I think I know what he was asking. Excuse me. I think one thing a lot of people don't realize with this project is the bridge that it creates between merchants and crypto and customers and crypto. So most of the marketing and the target audience is really non-crypto crowd. So all of us here have been in crypto for probably many years. It's a very small space. And we're used to seeing hundreds of thousands of projects. Glenn, you do about 300 AMAs, I think you said so far. But we're not seeing a lot of projects that come out that create that bridge where merchants and customers alike can get into crypto without even caring or knowing that they're in crypto. So that's a point that I'd like if Red One's on the call still to reiterate, or KK, whoever wants to take that.
Yeah, that's fine. I'll love to answer this. A good question. AppPay, this is one of the big problems we've had in-house is where do you market a product like AppPay, where you've got 100% of the world, in the real world that aren't in crypto, 96% of the world that's not in crypto, that this product speaks to. And they're the main audience that us as a team have been marketing to the last 2 years. Maybe we did, a lot of things. We believe we might have done a lot of things wrong, and the crypto audience would have been more of, the audience you want to go after when you're concerned mainly about a token that you're launching. But for the product that we've been working on and the effort we've put in to design, a solution for the buy now, pay later space that's going to change the world, we believe, change the world of microfinance and shopping and earning, and giving the ability for the merchants to, drop NFTs and talk to their customers and customer base. This is one of the important things for us, and one of the hardest things to overcome is where do you market? And the bridge that AppPay brings, for the crypto community and the mainstream, like I said earlier today, is you'd find a lot of people would download the AppPay app and start using it, not knowing much about crypto at all. But after they accumulate these rewards for using the app, they're going to want to learn on how do you, sell these tokens that, we've been rewarded, and watching them go up in value as time goes on. They'll want to learn how to be able to, sell and possibly learn more about crypto and getting more into the space and getting more advanced in understanding what they're actually involved in.
I think too, just to reiterate that point, is more or less on the on and off ramps, because on-off ramps are still confusing for a lot of people who aren't in crypto. Governments tend to still try to lock them down. Sometimes banks do that too. Although here in Canada, it is getting better, and we do have more on and off ramps for sure that are legit. I know in the rest of the world it can be difficult though still. So I see AppPay as also that type of bridge too, potentially for people to sort of just get into crypto, but their intention is to buy now and pay later, and then the crypto comes kind of after, as an afterthought maybe.
Yeah, I might just add to the answer to this question, and I think basically one of the overarching themes here is that it is there is a generational shift that is taking place. Our vision is not a vision for 1 year or 2 years. Our vision is a 3, 5, and 10-year vision. And I think that's where you really, are able to access the durability of the team and what we're doing. And we've been very mindful with regards to the need to educate as we go along. Having said that, I mean, the crypto world is still fairly significant in size. I mean, there's roughly around 300 odd plus million holders of crypto and those that are crypto literate globally. There's tens of billions of stable coins that are staked currently in DeFi protocols. And really, for us, it's a question of, one, putting ourselves on the map, ensuring that we're building a quality protocol, quality platform, ensuring that our ecosystem is populated with depth in terms of participants and participation. And I'll reiterate what I said earlier, which is essentially that the tailwinds that are behind what we're doing are those the same tailwinds that are driving the growth in buy now, pay later globally, and the adoption of cryptocurrency globally as well. And they are driven by the same generation essentially. So this talks to the future, and DeFi talks to the future. It's reimagining existing business models and disrupting them. The future is going to be a place where some of the existing financial platforms and networks, meaning banking, etc., are going to change. And the change is beginning to happen. The technology will drive that, and the gradual adoption by users will drive that as well. So it's really a question of designing something that's got a unique user experience. We understand the users are more tied to their devices these days than at any time previously in the history of technology. They're looking to do more on their devices. One of the proofs of that is the boom in e-commerce sales during the global lockdowns we saw vis-a-vis COVID. This is all meaningful for what we're doing. Essentially, the changes at play are the opportunity that we are capturing. And I think, it goes beyond, what we're doing in the here and now. And our strategy is designed to really, in the first instance, capture users with regard to all aspects of our ecosystem within the crypto space. That's why we're partnering up with NFT marketplaces, with gaming platforms, whilst not ignoring the traditional bricks and mortar merchants. But we are mindful of the changes in the way people are doing things and the way that, for example, merchants are looking to adopt this sort of technology as well. So I think, over time, I'm sorry, I didn't quite get that.
Who was speaking
I'll leave
there,
it at there.
But yeah, unfortunately, we're running out of time. But it's a great book. Red Plum Tomato said I was going to say that as well. AppPay is bridging over new people potentially to crypto investments through their buy now pay later platform, which is great. So as we go mainstream, it's just going to accelerate the future into more of the present. So it's super exciting for our community investors to hear about the AppPay platform and the AppPay token today. Thank you very much for coming today, guys. As we say, WellCoin talks for research and educational purposes. It's not financial advice, but you can check out the website, the white paper, which I highly recommend to read because it's an amazing white paper and they spell it out in layman terms for everyone, like I said at the start of the show. So it's easy and accessible to crypto and non-crypto investors to understand their vision for the future, which is super exciting. And the official socials are in our main chat as well. So if you want to head over there, if you've got any questions, I see a few hands still raised. You can carry it on into the Telegram of AppPay if you've got any questions after the AMA. I think now we've got spin the wheel for one lucky winner because I picked one for questions because we've got some great questions today. Oh, there it is. So it's $50 for one winner today, and there's $50 for one of the questions we had today as well. It's Ryan Horn. So we'll contact you shortly. Ryan, congratulations. And thank you very much to the app team, the AppPay team, should I say, for coming today. It's been awesome. And I'm, super excited for the future for AppPay. You're on MEXC Global Exchange as well already, and that's just started. So you can buy it over there, or you can buy it on any other platform.
Yep.
Thanks, Glenn. Appreciate it. We're also listed on Radium for those that are DEX fans. So thanks for having us, and we look forward to building something special and getting it out to you fairly soon.
Awesome. Thank you, Glenn.
Thanks, guys. Thank you so much.
Thank you all. Thank you. Bye-bye.
Thanks for coming, everyone. I'll finish the record and send a copy over for you to share with your community, and I'll send that into our main chat for anyone who couldn't join the call today.
Thank you.
YouTube recording and live streamed as well today, so that's great.